When you get into a tight place and everything goes against you, never give up then, for that is just the time and place that the tide will turn. Harriet Beecher Stowe. My friends, that is great advice. Just when you think you're not getting it, you're right on the cusp of getting it. Stick with this. You can learn to do it. And it just hit me today. This is the summertime trading zone. I used to pay so much attention to the trading zones back when it seemed like money was real, the economy was real, people had to work to make a living, companies had to produce products, and people paid taxes, things like that. And nowadays it just seems so bizarre. And it hit me as I'm watching the market make these fake outs, move down, move back up all over the place. And then it hit me. We're in the summertime trading zone. We're out of, and of course, guys, there are basically two main trading zones that I look at. They're transition zones between the two. But the fall-winter trading zone, when we get out of the summertime melees and get into the thick of it in the fall, when the market really makes good solid moves, either up or down. And don't forget, market crashes all occur in what month? October. That's almost always when they occur. So those October surprises, this October, who knows what will happen with the election coming up. But summertime, there is that old adage in the market, sell in May and go away, live to trade another day. That is because a lot of the big money seems to move out of the market, a lot of the volume. If you listen to the stock market mavens, you'll hear them say, well, there's no volume in the market, blah, 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 because so much of the big money's gone. That means that smaller amounts of money can move the market, and many times do. So, by all means, don't stop trading. It's even harder in the summertime, but if you can master it now, as we get into the thick of it, then of course it'll mean when the fat time gets here, the fall winter trading zone, you'll be even better prepared. Let's talk about where we are on the charts that we are looking at now. As we look at the S&P 500, you guys remember we jumped into this down trade back on May the 18th, down 1, 2, 3 nice days all the way through Friday, down 4.76%, and then boom, one move took us out, took out all that beautiful downward momentum. And then later in the day, it popped over green about midway. Now, what does that typically mean? That is a weak up move. In other words, we didn't bottom all the way out and then pop up. So we'll see. But we pulled that trade with minimum losses the minute that occurred. If you would have gotten out there at what is the close on the Heikin and Ashi candlestick, and don't forget, Heikin and Ashi candlesticks are put together with completely different high open, low close numbers. In fact, the close is the high open, low close divided by 4. It's basically the average. The high is the high, the low is the low. And the open is a combination of the high and low of the previous candle. So again, I do love the Heikin and Ashi candlesticks, but they are put together completely different. So you could have gotten out in the morning somewhere along when you saw that green candle burning. You could have gotten out with a little bit of a profit or a little bit of a loss once that thing started really turning green on you. Did not stay in for that afternoon candle. It continued to move up because as we look at the Heikin and Ashi candlesticks, particularly here of late, we can see, and this is something I really wanted to point out to you guys, the sooner you see a red candle form and the STC move over going down, typically, and we like it to be higher when it happens, but when it happens right at the beginning of the down move, if you see this one here, you notice that it's a green candle up there. Let me bring this down a little bit so you can see. Green candle, and the minute it turns red, the STC crosses. I want you to pay close attention to that. What does that mean? Well, that was a good 3.25% move down in about a day and a half. Just red down candles, no wick on top, no spinning top, just wicks on the bottom, actually accelerating down. Absolutely beautiful. When you see the move start going down, but you don't have the STC crossover until later. And in fact, the later and the later and the later it goes, the more of a problem you're probably going to have on that move. You'll learn that by doing it. Now, if you guys recall, we jumped into this move early. So we did get that good down movement, but with the STC starting late, it just sort of set us up for a pop-up. And again, what you're always looking for, what I feel the best about, is when I see that first red down candle. Oh no, I just screwed that up. Anyway, we'll go back and fix that. When I see that first red down candle and I see the STC go red, I know because I know that is going to be a decent up move. And of course, I mean, you can see here, this green, it didn't go green until the second candle, and it was a shortened move. So again, works both ways. You really want to see that trigger fire on the STC with that first down move. It just goes to show you that it's much, much stronger. Red spinning top, not the strongest kind of down move, but when you see things really accelerate down with a strong red down candle like we saw here, no wick on top, just on the bottom, that is what pulls that STC over, going down immediately. So when you see that, act with even more reckless abandon. Now, I'm going to not save the chart. I've learned this, but if I actually call it up again, it'll reopen. In fact, what I'll do is I'm going to show you a little trick I do. I'm going to switch over to another chart, leave this, and then I just don't want to accidentally save it. And then I'll flip back over right after this one loads up to the chart I was just on. And you can see I play around with a number of different charts. I'm always checking out things like, I was looking over the weekend at these smooth dynamic candles. Again, always experimenting, always looking for something, but again, doing what I know works. Now, we'll reload these charts again so that I don't end up saving something bad. I will note for you guys, I do not use the autosave. Why? If I end up screwing something up, I don't want it to autosave. I want to save it on my own. So, as we look at what's going on with the S&P, of course, it did bounce up for the day, took us out of our short trade, popped up 1.87% as we look at where the 2-day is. 2-day is, of course, still negative, and the weekly is still negative. Now, for those of you who say, Tom, okay, you're telling us that during the fall-winter trading zone, things are a little sketchy. Does that mean we don't do just the 2-for-1 since we don't know, doubling the profit over the risk? Should we reduce that a little bit? I would say instead of reducing it, how about taking half your profits at one time the ATR and then letting the rest of it ride to see if you can get 2 times. That way, again, you're reducing your profit potentially, but at the same time, you can capture something there and you can protect yourself against some of these crazy summer swings that we see. Just food for thought. Now, we're not jumping into this up move. Why? Because we're still well below the 200 EMA. So we're not going to be jumping in that. Now, let's look at where we were on the Nasdaq 100. Again, jumped in early, had 4.67% where we hit that down, and things popped up And again, it wasn't until the afternoon, well, even in the afternoon, it didn't get up to where we had jumped in originally. So there was a little bit of an area there for a profit, maybe 0.5% or so. So again, maybe a little more than that. That you could have captured. Still red, and again, if it flips back over going down and stays strong red, we might look at jumping back in. But again, same kind of thing goes. You could have taken, when it did 4.41%, you could have grabbed half that profit, let the rest of it ride. Again, just other possibilities, things you can do. And I encourage experimentation all the time. Always be figuring out ways to make profits and to preserve them in the charts. And of course, the more intimate you get with various ETFs and stocks, the more you'll know their personalities and you'll know what needs to be done. You might do that on one, but not another. Now, as far as the Nasdaq 100 goes, 2 days still heading down hard, and the weekly still heading down hard. So we're negative 14, well, we're negative 15 still on the Nasdaq 100. We're negative 14 as far as the success multiplier formula goes on the S&P. Let's move on to bonds. You can see that I opened up a bond down trade here. Of course, what are your choices? You could look at shorting bonds, or you could look at something like Tango, Bravo, Foxtrot. I was talking about that last week. TBF, it is the ProShares short of the U.S. Treasury bond TLT. And of course, you can see that it is moving up after 3 days of down movement. It's popping over, moving up. Now, as we look at TLT, and we'll just try to stay on one chart, we'll call it a short here. We look at what's up with 20-year bonds. Well, going down at this point. Haven't seen a rotation over yet on the STC. Again, not super strong down movement. Look at the 2-day chart. It, in fact, is heading up. So we're not at a negative 14 or a negative 15 here. We look at the weekly. It is still down. So we're just a negative 10 right now. So we'll keep an eye on things, see what's going to go on, see if this is a long-lasting move, if it gives us any opportunities. We're in the green right now. If things start popping around on us and heading back up again, we'll quickly pull that practice trade. But it's just something I wanted to take a look at. Remember, it doesn't cost you anything to practice as long as you hold yourself accountable and learn from it. Let's go to gold. What do we see going on with gold? Well, you know, we had that successful down gold trade, 2.89%. Then, of course, that ended. Things popped over. We're still below the 200 EMA, so we're not jumping into that up move. We're going to let, again, the overall quality of the trade be dictated by whether we're above or below the 200 EMA. That is a big dividing line to tell us where the pressure is. We're in down pressure right now. In addition to that, we see that the 2-day is negative, even though those latest candles there are up, that latest candle, and the same on the weekly, up candle, but again, we still have the STC down on those charts. So we're at a negative 14, but nice to see some green candles there on those bigger charts. We'll keep an eye on things. I'm ready for gold to take off. But that's where we are on gold. If gold does roll back over on us, we'll be ready to jump back in and hopefully duplicate what we saw here in the past. Now, let's take a look at Bitcoin. We'll go to the Van Eck Bitcoin Trust. This is, of course, the Bitcoin future, closed in short future. What do we see going on here? Well, we see this crazy sideways slide. Has Bitcoin hit a bottom here? Don't know. But because of all that sideways creeping, makes no sense that you see a green, does it? A green STC. That is because we have no ranging here. Remember, the STC, like the PPO, is mostly the moving average convergence divergence indicator. It also, unlike the PPO, which is just a percentage version of the MACD, the STC also has a stochastics calculator in it. So again, regardless, without any movement where things are just sliding sideways, you don't get accurate signals off the MACD, the PPO, or the STC. We've got to have something moving here. So it may be green there. We look at where Bitcoin is on the 2-day chart. Still negative, but again, maybe bottoming. That would be nice. And on the weekly, again, for the last 3 weeks, somewhere around this area. So we'll continue to keep an eye on things and see where Bitcoin is going. We'll let you know when and if it takes off, or it's just digesting these losses and getting ready to go down even further. We don't know. The charts aren't telling us. We're waiting. That's where we are, folks, as we end the day on Monday and we head off into Tuesday, and I hope a glorious week of fun trading. We love to hear from you. CW@chartingwealth.com. Thank you all you Patreon members for your support. God bless, my friends.